Hey, what's happening? This is the Strategic Finance Whale, Kevin Whalen, coming at you today with strategic modeling in EPBCS. Being a huge fan of strategy and finance, I'm really excited today to talk to you about this brand new product from Oracle. So, the objective for this video is to go over what is strategic modeling, also describing its on-prem sister counterpart, what is HSF. I'm going to talk about the interfaces, EPBCS and SmartView. We'll go into the models. We'll talk about creating a model. I'll talk about account forecasting, reports, the Audit Trail, and Scenario Manager, some of the features based in the models. We'll then go into the model consolidations, and then I'll also describe how the industry templates work. So, what is strategic modeling? Strategic modeling is HSF on the cloud. Woohoo! So what is HSF then? Well, HSF is Hyperion Strategic Finance. Woohoo! What is Hyperion Strategic Finance? Well, let's get into that. HSF is a standalone product for financial statement forecasting and modeling. It's got over 20 years of accounting integrity built in. It automatically creates all three financial statements, and they're permanently connected according to accounting rules. So you can't make changes to the income statement without affecting the cash flow, etc., etc. It also allows for high-level scenario analysis and complex consolidations. So this would allow for things like, say we want to buy a competitor with debt. What will our dividends look like in 2025? Or, let's say we divest this poorly performing division and use cash to pay down the debt. How does that make our tax impact look like in 2028? So strategic modeling in EPBCS uses the HSF engine and not Essbase like the other modules. So how does strategic modeling differ than Hyperion planning? Well, let's think about when you would use each one. You're going to use planning when you're making tactical decisions. How much travel and entertainment budget do we spend? What's our budget look like for next year when it comes to salaries and benefits? When would you use strategic modeling? That's when you get into the real big picture questions. Should we buy a competitor? Should we divest a division? Should we pay down our debt? Should we pay dividends? What's our company worth? Those kind of questions are better answered with strategic modeling versus the tactical decisions you'll be using with planning. Let's look at the comparison between Hyperion planning and strategic modeling in a little bit more detail. Hyperion planning, or some of the financials or other frameworks within EPBCS, are more tactical versus strategic modeling obviously being strategic. Think of things like a shorter term use for Hyperion planning for forecasts of this year or maybe next year's budgets, only a few years out, where strategic modeling is going to give a lot more of a long range plan. Typically, Hyperion planning is going to be done by the FP&A group, maybe income statement to around EBIT and maybe a high level balance sheet with some items like CapEx, etc., but not as detailed in all three financial statements as you'd see in strategic modeling. Another thing is the granularity that you might be looking at. You think of strategic modeling maybe at a higher level like salaries, where planning you're going to get into details like these are the mechanics, hourly salary, this is the benefits, etc. Planning also, as I mentioned before, is a multi-dimensional database, so it has a lot of dimensions, where strategic modeling only has account, time, and scenario. There are other dimensions that you can add to some accounts, but it's more like sub-accounts. Another thing is that planning doesn't have a lot of the strategic modeling features. One of the things is the debt modeling, who's using their debt scheduler. There's M&A using the consolidation function, and then there's a funding routine that always preserves cash, and it tells you what you should do with cash surpluses or how you're going to fund cash deficits. And to build a cash flow statement that was completely comprehensive in planning, it would take a lot of scripts, taking care of into account everything that happens on the balance sheet, all the changes in inventory, etc. Also, another thing is typically strategic modeling, you're going to see a smaller user base. These are going to be people that kind of report up through the C-suite, as opposed to everybody, hundreds of users for Hyperion planning. So, what are the benefits of strategic modeling? Well, it's going to create a comprehensive view, a long-range, high-level plan of your financial statements. It's going to allow flexible what-if scenario analysis, and this is going to show you how assumptions impact various financial pieces of your company. It'll also provide transparency. It's got an analyze trail. That's a pretty nice feature that'll let you drill back into and see what assumptions were made and how you came up with certain numbers. It also has features like I mentioned before, like the debt scheduler. There's the funding options that always conserves your cash or tells you what to do with your cash deficit or cash surplus. And it has the consolidation features, which is really nice for M&A modeling. So it really provides you with a more viable, scalable, and easier to use financial forecasting solution. It'll also allow you to easily change from annual to quarterly or monthly reporting. This is something really nice versus Excel. If you wanted to add more detail in the time, like months or quarters, it'll automatically extrapolate if it can figure out how to get between the two pieces, and it's a lot easier than trying to add columns and relink the items that you would do in Excel. And the big feature of this is always the accounting integrity. Cash is always conserved using that funding options, as I mentioned before. You would also know that if you make any changes, you'll see that maybe your future debt gets taken out or maybe it pays down debt, and you can pick those pecking orders from your funding options. So cash is always conserved, and so you have that accounting integrity built into all your financial statements in the future. So, what is strategic modeling? Well, according to Oracle, strategic modeling is a solution that combines a set of rich financial forecasting and modeling, blah, 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 blah. What it really is it's a module within EPBCS, which allows forecasting and scenario analysis. It has a lot of out-of-the-box treasury capabilities like debt modeling and capital structure management. Financial statement with data integrity, it allows for high-level analysis of various assumptions like M&As, divestitures, etc. And great for reporting for like C-suites, investors, credit agencies, and any other high-level people that are interested in how the overall company is doing. So, according to Oracle, strategic modeling has several features. One of them being the chart of accounts that's always integrated, that allows you to always have the income statement, balance sheet, and cash flow in sync. It allows for consolidations, forecast modeling, you can do what-if scenario analysis, target setting. It mentioned some integration here, though this is not necessarily data integration. I'm assuming that that's coming up in the next revision. So how do you enable it? It's pretty simple. You actually just go to the configure on EPBCS and configure it just like you would any of the other modules like workforce capital projects, etc. Strategic modeling is also available in SmartView. Simply download the add-in directly from EPBCS, run the install program, and you'll notice that it creates new options in your SmartView panel, and it also adds a ribbon, strategic modeling, in Excel. I would highly recommend installing the SmartView add-in, as at this point it provides functionality that isn't available in the web interface. So once you've enabled it, you go to the home screen, you'll notice strategic modeling up there in the upper left corner. Once you click on it, you will see that there are three components to it: models, model consolidations, and templates. I'll go into each one of these in a little bit. The modeling section of strategic modeling is where the models are kept. Makes a lot of sense there, huh? What are models? Well, models are a set of financial statements. So typically a model would be a division that you want to analyze its contributions to the overall corporation. Say you want to see what it would look like to divest or acquire a division. That division would probably have its own model. These used to be entities in HSF, but I guess that was kind of confusing to name it that way with other Oracle EPM products that use entity in a specific manner. So let's see what it's like to create a new model. From the prior screen, select Create. Then you'll notice you have the opportunity to create a model from an existing model, or you can take one of the pre-built industry templates like healthcare, higher ed, retail that Oracle's put in there, or you can upload your own custom template from SmartView. You can also place this new model as a root, or you could build it as a hierarchy if you'd like to be able to keep track of where it sits within an organization. Currency and units are independent of the application, and the conversions are all set up in SmartView. So the next thing you're going to want to do is set up the calendar and time period. You set up the calendar type and you select the start and end years. So important thing to note is a lot of the modeling is going to be based on the historic periods. So see how much historic periods you can have that make sense, that are relative to what you think the future forecasting is going to look like. And you can also have the option of changing your fiscal year, etc. Next, you're going to want to configure the details within the years. So maybe you're going to want the current years, the next year to be monthly, then quarterly after that, and then in the far future, let's make those annual. This can all be changed within SmartView, so don't worry too much about what you're picking now. One of the nice things is the way that it does handle time. Finally, you're given one last chance to take a look at your new model, review it, create model, and hopefully you see the model creation status, model created successfully pop up. Now that you've created your model, you're going to go back to the model screen and you're going to want to check it out. Now, checking out models isn't like going to be on the runway. This is a little bit different. But this is one of the great things about Hyperion Strategic Finance that's been carried over into strategic modeling, is the fact that you have a check-in, check-out system that ensures version control. This way, if you have people in Treasury, people in FP&A, all working on the same model, you don't have any overlap or any redundancies. So, once you check out your model, you're going to be brought over to the account view. The account view is the main section for creating your forecast. It's going to contain every single account, income statement, balance sheet, cash flow statement. You can select the scenario that you want to be forecasting, as well as the data view. Now, the way the data view can be best explained is that each account has two parts, an input and an output. So, for example, if you set the forecast method for sales to be year over year, the input line might say 10%, where the output line would be the previous year times the 10%. So if you put in $100 million the previous year, you put in 10% in the input line, the output line would show $110 million. It also allows account grouping, which helps with navigation. Another thing about the account view that I'd mentioned before is that it has the accounting integrity. This means that each account has its own special relationships with its other accounts according to GAAP or IRFS. So, for example, a change in sales is going to change your net income, which will impact the cash flow, which will in turn change the cash on the balance sheet. So you really can't cheat it. Anytime you start changing some numbers, and if you go out of scale, you may notice certain things like it starts taking out more debt for you, or maybe it starts paying more dividends, depending on some of the settings that you select. So from the accounts view, you'll notice on the right an actions menu. So from this actions menu, you can forecast your accounts. This is going to allow you to predict your individual accounts by either using pre-built methods like year-over-year growth, percentage of another account, or it also has a free-form calculator editor to create your own formulas. You can also use sub-accounts, which allows for some customizations of the account. Also have a goal seek button here, and that'll give you answer questions like, what revenue growth assumptions do I need to have $2 billion of cash in 2025? Again, since everything's interrelated, it'll change one until it gets to a target that you've input. Scenario Manager allows you to create new what-if scenarios, and it gives you some opportunity for analysis to compare between the two. Say if you pick an upside case here and a downside case there, what do they look like compared to each other? And lastly, the Audit Trail. The Audit Trail is a nice handy little feature that provides transparency and allows you to trace data back to the original assumptions. So how does the account forecasting work? Well, accounts can be forecasted in either standard or free-form methods. So standard, as you can see from the menu, things like growth rate, days, turns, if you're talking about different inventory type stuff. You also have the ability to do a free-form builder with lots of functions. So, leaving the account view, if you notice across the top, there is a list of different reports. This will start off with all the pre-built reports, income statement, balance sheet, funds flow, etc. There's a second tab that allows you to look at any of the freestyle reports that you've created in SmartView. One of the great features is the Audit Trail. It provides transparency and lets you know where the numbers come from. For example, if I collect on gross profit in 2021, I see $68.5 million. When I select the Audit Trail, I can see that this is made up of $137 million of net sales minus the cost of goods sold of $68 million. You could even drill these back. This is a great way for you to be able to figure out where the inputs came from and what assumptions were used to arrive at the end results. As I mentioned before, one of the most powerful features of strategic modeling is the ability to create what-if scenarios. These scenarios can be used to determine the impact certain assumptions have on your future financials. You do this using the Scenario Manager, which will allow you to build and inherit from other scenarios. So you can have it in one piece, change something, say you wanted to have a bull case of a 10% sales growth, or a bear case of a 12% increase in raw materials. You can do that, create the different scenarios, and easily switch back and forth and check out things like how is this going to impact your future financials, what does your cash look like in the future, how does it change your dividend assumptions, etc., and switch right back and forth easily between the two scenarios. Another powerful main feature of strategic modeling is the model consolidations. You'll find this as a separate card from the home screen in EPBCS, just like you found the models. Once you select on the model consolidation, you'll find all the models that you've been creating, and you could set them up in a hierarchy. And once you do that, you can change certain scenarios. You can have an upside test. You can do your bull, your bear cases of each entity. And then you can see how do they consolidate. Are we using a cost method, an equity method? Are there minority interest? Is it full consolidation? You can also select which accounts to eliminate or block as well to make sure it's accurate consolidation. You can also change the ownership percentages in case you have joint ventures, etc. Let's look at model consolidations in more detail. So remember, each model is going to be a full set of financial statements, the income statement, balance sheet, cash flow, for one of the entities in your corporation. You may have 10 of these entities, all rolling up in a hierarchy up to the overall parent corporation. The consolidation is going to allow you to roll all these up using various methods that you might want to be using, like I mentioned before. If you have JVs or not 100% ownership in some of these entities, you can use the consolidator to represent that. You can also change time frames if you're doing M&A and you have a deal period that you want to look at. You can also change some of these attributes. You have child attributes and parent attributes on each of these nodes, and what they will allow you to do is eliminate groups or blocking groups, things like tax rates. You don't want to roll those up to a parent company. The third card in the EPBCS interface under strategic modeling is templates. Templates are pre-built models that have accounts and reports specific to industries. There's healthcare, higher ed, retail, and utility, as well as a standard template. So for example, I opened up this healthcare template, and you can see what it's done under revenues is provide with 3 sub-accounts: Hospital A, Hospital B, Hospital C. This allows you to go on for further customization, but will also offer certain ratios and accounts and different reports that might be industry specific, giving you a starting point that was set by Oracle before you start doing your configurations for your unique company. So, in conclusion, today's video talked about what is strategic modeling and what is its sister product, HSF. Strategic modeling is a forecasting product that creates comprehensive financial statements with out-of-the-box treasury capabilities with scenario analysis and robust consolidation capabilities. This allows you to quickly understand the impact of major strategic decisions on your future financials, which is extremely valuable for the C-suites, board of directors packages, investors, and any other high-level people that are analyzing a company. We discussed the interfaces of EPBCS Web and SmartView. We went through the major parts of it, which include models. We talked about creating a model, account forecasting, reports, Audit Trail, and the scenario manager. We also went through the model consolidations. And lastly, we went through the industry templates. Thanks again for listening. Happy modeling.